people are really disappointed by crypto this year because number one, they didn't go up when AI was going up. But in some ways, crypto is a downstream story of AI because as AI capabilities go up, we already hear it from a lot of those AI researchers, it's going to increase the need for blockchain because that's the only way to prove and validate transactions and actually protect us from AI.
Is Bitcoin's weakness a warning sign or the biggest opportunity investors are missing? While fear spreads across crypto and markets brace for massive AI funding rounds and the highly anticipated SpaceX IPO, Tom Lee says the bull market is far from over. In fact, he believes Bitcoin and blockchain could become even more important in the age of AI. Here's why Tom Lee thinks investors shouldn't give up on crypto just yet.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
As best as you know or can tell, what happened on Friday and what happened today, because those days, 48 trading hours apart, are very, very different.
Yeah, Brian, as you know, stocks had done well for some time. So I think there's a lot of people that are worried about the air gap below because so many stocks move so quickly. And then jitters emerged. I'd say 3 jitters emerged last week. The first is, how strong is the AI trade, especially with some of the guidance that came out of Broadcom. The second, of course, is just the realization that Google is going to raise $80 billion plus SpaceX 75, OpenAI maybe 100, Anthropic 75, and then Meta, of course, filed as well. So there's a lot of equity being raised and asking the public to fund that. And the third is, of course, the geopolitical tensions. I think people get generally nervous into a weekend and they're worried about whether there could be something happening in Iran. So I think those are the jitters. And as you know, we get these pullbacks, in our opinion, and we commented over the weekend on this. I think it's a false narrative to think the bull market is in trouble. I think the bull market's still intact and in very good shape.
Tom, it's Kelly here back at the studio, and one of the areas that's been obviously most under pressure is crypto. And I know that you say people shouldn't throw in the towel, but I think it feels like a lot of the kind of buying velocity has simply left this space, and I'm not sure when it will ever return.
Well, yes. Kelly, I think people are really disappointed by crypto this year because number one, they didn't go up when AI was going up. But in some ways, crypto is a downstream story of AI because as AI capabilities go up, we already hear it from a lot of those AI researchers, it's going to increase the need for blockchain because that's the only way to prove and validate transactions and actually protect us from AI. Last week, I think that there were some high-profile sort of, quote, AI security exploits, one that happened on the Orchid suite for Zcash. And that caused some panic. I don't know why it should have caused all of crypto to sell off. But keep in mind, AI exploits are happening at a rapid pace and an increasing pace across all of financial services. It's just that the publicly traded banks don't actually reveal the exploits. So I think that these attack surfaces are increasing everywhere, and we have to be mindful of that. And the third is, Wall Street is still tokenizing. It's a big innovation, turning money into software, tokenizing equities and real estate. These are composability issues that only happen on blockchain. So to me, I think the crypto narrative is still in good shape, but you're right. The excitement and the FOMO has been in AI.
Tom, going back to the stock market, we're seeing some of the Mag 7 stocks down. The Dow is down just a touch. The NASDAQ 100 is still up 2%, but all the averages have come back. We'll likely end the day higher, but if the S&P were to end the day lower after the boom that we had for the first couple of hours today, would in any way that change the way that you look at this market? And if not, what would?
Well, Brian, there is going to be a lot of tension in markets until June 12th, because I'd say there's a very large camp of our institutional investor clients that would say SpaceX is going to be the market top. So they're anticipating the markets to wobble. So what they're going to do is take profits and be cautious onto that date. But I'd say that history shows that the SpaceX IPO should not actually mark the market top. It's actually rare a big IPO marks a top. So to us, I think it's actually misplaced concerns. There's still $7 trillion of cash on the sidelines, and we already know the book's been filled. High net worth clients have a lot of cash available to buy this IPO. So I think the market's going to not only absorb this IPO really well, but I think the market's going to do well post-IPO.
If you only had a fixed amount of money, Tom, would you invest in these IPOs?
These are some of the most important companies led by what they call N of one people. I mean, I don't know if there will be another Elon Musk in our generation. So for investors who have not owned Tesla, this is a chance for them to have exposure to Elon Musk and all of what he's envisioned. And again, the addressable market for AI and especially data center, and as you move into space, is actually sizable.
One of Lee's strongest messages is that investors should not confuse temporary volatility with a broken market. He argues that every healthy bull market experiences periodic pullbacks. These declines often feel uncomfortable in real time, but they serve an important purpose by reducing excessive optimism and creating stronger foundations for future advances. According to Lee, nothing about the recent weakness suggests that the broader bull market is ending. Instead, he sees investors reacting emotionally to short-term uncertainties while overlooking the bigger picture. Economic activity remains solid. Corporate earnings continue to support valuations. Technology innovation remains strong. And perhaps most importantly, significant amounts of cash remain on the sidelines. Lee points out that trillions of dollars are still sitting in money market funds and other cash equivalents. This capital represents potential buying power that could continue supporting markets during future pullbacks. For him, the current correction looks far more like a pause than a reversal.
You look at this market and you think what?
Well, Scott, I think the market, of course, is showing a lot of signs of jitters to me. The jitters in front of the SpaceX IPO and also just consolidating all these gains. Plus, we know there's a lot of future capital that's going to be raised by Google, Meta, OpenAI, and Anthropic. So I think the market's trying to sort of price all this in front of the SpaceX IPO, which is this Friday. I think it's healthy, though, and I don't think it's actually going to derail the tech trade either.
Well, what's happening in the chip stocks? Are they the ones where you think there's been the selling as most related to positioning ahead of the IPO that's coming later this week in SpaceX? How would you assess what's happened there?
Yeah, that's right, Scott. I mean, SpaceX is a $75 billion IPO, and because of its index inclusion into the NASDAQ 100, a lot of institutional funds are now going to have to raise funds to not only buy the IPO, but then to have cash available to actually position size, because they don't know if it's 4 times oversubscribed, they'll only get 25% of their allocation. But then to get a full market weight position, they're going to have to buy a lot in the aftermarket. I think that cash means selling some of the recent winners. I'd say the good sign, though, is that the memory stocks held above the Friday lows, and same thing with the semis. So I think that there's basically gut punches being seen there, but I don't think it means that those charts are completely broken.
Does the market need SpaceX to trade well in its debut?
Yeah, I think it is important, Scott. We expect it to trade well because it's an important company, and the Elon Musk himself is an N of one person, but there's also a pretty good roadmap for why there's a future growth and a very big addressable market. If it trades poorly, I think it's going to give credence to a lot of the skeptics who say, well, the market's topping and, this marks the top. I'm kind of going to lean against that because I've been hearing a lot of folks declaring the top is in. So I'd say as a contrarian, because so many people think SpaceX marks the top, it's probably not the top.
You think the uptrend is still intact, to be led by tech?
That's right, Scott. I do. I think that this is a dip that's going to be bought. As you know, we still expect this to be a three-phase market this year where we have a strong uptrend. I think that continues for the foreseeable future. I do think there's a pullback later this year. I think it's closer to lockup expiry and that overhang. And overall, I do think it's tracking the way we thought, which is 2026 would be a tough year, but overall a good year.
But you're still looking for some Fed-related turbulence or volatility as well. You were talking about that more as a reason why the market would have a pullback more so than lockup expirations for some of these big IPOs. Have you changed your thought process there?
Scott, I think it is three parts that create that second part drawdown. One is the Fed, the market testing this new Fed chair, Kevin Warsh. I mean, he's going to make his debut this week, but it is really going to be testing his ideas of how to measure inflation and his path forward, and especially in the face of what might be policy that he pursues that is not in sync with the White House expectations. The second is, I think, the lockup expirations of all these large IPOs. I think that does represent supply. And the third factor, I think, is that as much as oil's the price has not risen as much as we expected, I do think there's going to be shortages developing later this year that the market's going to grapple with.
Although Lee remains bullish, he is not ignoring potential risks. He identifies three factors that could create volatility later in the year. The first involves monetary policy. A new Federal Reserve leadership team could face intense scrutiny as investors attempt to understand its approach toward inflation, interest rates, and economic growth. Any deviation from market expectations could create turbulence. The second risk involves lockup expirations associated with large IPOs. When insider lockup periods expire, additional shares become eligible for sale, increasing supply and potentially creating downward pressure on prices. The third concern is energy markets. Lee believes oil shortages could emerge later in the year, potentially creating inflationary pressures and economic uncertainty. While none of these risks change his long-term outlook, they could contribute to the pullback phase he expects during the second half of the year.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.